Everybody, thank you so much for being here. My name is Samuel James Price, and every single day I do the Crypto Lifer Show, Monday through Friday, 10 a.m. to 12 p.m., and Saturday and Sunday nights at 8 p.m. We also have the Lifers here. The Lifers are watching the show. I'm the Crypto Lifer, and together we make the best show in all of cryptocurrency. And every day we do a quick 5-minute news segment where we break down the news for you, show you what's happening in the market, show if there's new exchanges coming back, show you what's happening with possibly bankruptcies, Celsius, all that stuff that happened. We want to know. Who's going to jail? Who's not? What happened to Do Kwon? Did he run from the government? Did he put a ledger where the sun don't shine? Stuff like that is fun and interesting to us to know. And we also want to see if there's mergers, if there's something going on with the mainnet and information like that. We're going to start off with a bombshell piece of news here. FTX has recovered $7 billion in assets so far, has almost $2 billion to go to cover misappropriations. Tracing funds is highly challenging, according to the FTX debtors' second interim report. And there's no doubt that was by design. FTX has recovered about $7 billion in liquid assets so far, and the search for additional assets is continuing. CEO John Ray said the FTX debtors' second interim report released June 26. The extensive commingling of funds complicates their efforts. However, the FTX debtors made up of FTX and affiliates currently estimate the amount of customer assets misappropriated at $8.7 billion. Most of that money, about $6.4 billion, was in fiat and stable coins, which FTX did not differentiate between its accounting. The former FTX leadership did not commingle and misuse customer deposits by accident, the report alleged. The leadership hid its actions with the assistance of a senior FTX group attorney. Notwithstanding extensive work by experts in forensic accounting, assets tracing and recovery, the blockchain analysts, among other areas, it is extremely challenging to trace substantial assets of the debtors to any particular source of funding or to differentiate between the FTX group's operating funds and deposits made by its customers. The extent of the chaos was driven home by a diagram of the flows of FTX customer money out of primary deposit accounts as identified to date. Those flows were made possible by misrepresenting their purpose to banks and many other false representations, the report said. I mean, look at that flow. I mean, that's insane. Customer deposits came in, they got split 3 ways. Then this went all the way to this, which went to that, which went to that, which came into that, which got sent there, which got sent to this bank, which got, oh my God. Like, that is commingling at its finest. That's so commingled. Oh my gosh, man. It's like, that's crazy, man. U.S. lawmaker calls for info from Treasury and SEC on crypto market structure bill. Maxine Waters gave Janet Yellen and Gary Gensler a deadline of June 30th to respond to her request on the digital asset market structure bill proposed by Republican lawmakers. Hey, you got people on both sides of the aisle eventually getting upset. That's what we want to see, and we can get some type of bipartisan movement there. First Mover America's crypto fund sees largest inflow in a year. The largest price moves in crypto markets in context for June of 27. So top stories, the European Union on Tuesday secured a political deal on a new bank capital legislation. Cryptocurrency custody technology provider Fireblocks has started offering support for cloud services. Providers Amazon Web Service, Google Cloud, Alibaba, Thales, and Securosis, the company announced Tuesday. OKX has launched Nitro Speeds, a feature on its over-the-counter OTC institutional liquid market. Pretty awesome. So First Mover America's crypto fund sees largest inflow in a year. Dude, that's huge, man. Money is coming back into the market in troves. You're seeing institutions beginning to build. Something is brewing. We're getting ready for a big move in Bitcoin. If I can see it, you can smell it, you can hear it. A16Z, ARK Invest back $37 million round for Mythical Games. Crypto asset manager Skytail Digital led the Series C extension round for NFL Rivals Creator. Interesting. Web3 gaming studio Mythical Games has secured $37 million in funding for the first part of its Series C extension round. The funding was led by digital asset manager Skytail Digital, with participation from prominent investors such as ARK Invest, Anderson Horowitz, and Animoca Brands. The extension follows a $150 million Series C round in November, which was led by A16Z and valued the company at $1.25 billion. The Seattle-based firm plans to close the extension round later this year and anticipates raising $20 million to $30 million in additional capital. Mythical Games is known for its Mythical Chain blockchain and gaming ecosystem, Mythical Marketplace, and popular blockchain-based games, NFL Rivals, and Blanco's Block Party. NFL Rivals topped 1 million downloads last week, 2 months after its launch. I mean, that's a big deal. You got the more NFL in there, Mythical Games, you got gaming, you got Web3, you got sports, and the NFL, I mean, that's a home run, if you ask me. The company hit rougher waters last year, losing 3 top executives in early November, and a day later announcing its job cuts that hit 10% of the workforce. The former executives went on to form Phoenix Games, and Mythical Games sued the trio in December for secretly raising $150 for their new firm. Shady. Looking forward, Mythical Games will launch Nitro Nation World Tour in late July. The racing game for mobile and desktop will feature car brands like Aston Martin, Jaguar, Pagani, and Lotus, and allows players to race around the world to collect digital vehicles. This is a big deal. This is big. I like what's going on here. We're going to look into this company here, Mythical Games. And I didn't get the name of a coin there. Maybe is it Mythical Chain? That's the blockchain that we're looking for there. And interesting. I don't know about this. They're acting like it's more popular than I didn't really fully know about it. So, El Salvador grants first digital asset license to Bitfinex. And there you go, man. More and more exchanges all across the world. Love it, love it, love it. Leverage Bitcoin Futures ETF launch set for Tuesday. Volatility shares set to debut first product to give leverage exposure to the CME traded futures after latest wave of spot Bitcoin ETF applications. The first U.S.-based ETF to offer leverage long exposure to Bitcoin futures contracts is set to launch this week. Volatility Shares plans to debut its 2x Bitcoin strategy ETF on Tuesday. A spokesperson told Blockworks the fund seeks investment results that correspond to 2 times the excess return of the S&P and CME futures daily roll index for a single day. Now, U.S.-based crypto traders will have convenient and liquid access to the leveraged Bitcoin exposure through a traditional brokerage account, eliminating the need for crypto exchange account during a time of legal uncertainty for such platforms. We want our crypto, you fool, and we want to put it on a hardware wallet. You're so funny. Like their marketing tactic of making their business more accessible is kind of why we're not totally in, like the blockchain people were just like, I don't know about that. SEC lighting up on Bitcoin. Volatility Shares launch follows applications from various fund issuers and exchanges over the last couple of weeks, signaling the latest wave of bids for ETFs that would hold Bitcoin directly. The SEC has not allowed so-called spot Bitcoin ETFs to come to market, despite the fund issuers trying for roughly a decade. But Bloomberg Intelligence analyst James Steffiart and Eric Balchidas tweeted last week that the SEC's willingness to allow leveraged Bitcoin futures ETFs could signal a generating lightening up when it comes to Bitcoin products. Also, BlackRock will get their way. I'd be flabbergasted if BlackRock doesn't get that ETF approved. And Shibi Finance vanishes with $1 million in Arbitrum network in apparent rug pull. Shibi Finance, a DeFi project on the Ethereum Layer 2 network Arbitrum, has been accused of staging a rug pull. On-chain analysts found that 555 Ether, $1 million, was drained from the platform's liquidity pools. Shibi Finance, a recently launched DeFi project operating on Arbitrum's Layer 2 network, has been accused of staging a rug pull, allegedly absconding with roughly $1 million in user deposits. The on-chain analysis carried out by security analysts at Peg Shield showed that 555 ETH, equivalent to $1 million, was drained from the platform's assets. And again, when you think about that, $1 million isn't that much money. People think it is, but it's not enough money to really, that can be followed on the blockchain. Then they have forensics. Then they can have cameras. What building did they go into? What computer did they use? If they weren't extremely efficient at it, you're eventually going to lose your entire, your who you are. You're going to lose who you are, your name. You run your name through the mud for $1 million. Worst thing you could ever do. Jack Dorsey-backed Lightning Dev Kit releases simpler kit for running a node. I mean, things are just getting easier, more accessible. There's more people that know about Bitcoin. The halving's coming. You have big money coming in. I mean, I smell a huge move. Things are brewing for Bitcoin. I'm excited. You should be excited.